Hello and welcome to Money Control's live stream. You're watching Closing Bell with me, Lovisha Darad. Well, once again, we're seeing a very choppy session today. We did see, however, that Sensex has closed with a gain of about 259 points, but off about 500 points from its day's high levels. And Nifty has also closed above that 24,300 mark. However, it is off your 200 points from its day's high level. There was wild gyrations that we saw in the markets today, and the past three sessions have been quite choppy. However, for the week, both Sensex and Nifty are up 1.5% each. So that is one positive cue that we can take. Third straight weekly gains that the benchmark indices have posted. But for today, the session was quite choppy because here we are seeing that the declines have taken an upper hand while the advances have taken a backseat. If you look at some of the sectoral indices, what have helped the markets, that is your Bank Nifty index, which has closed flat in the green at this point of time. On the other hand, if you look at Nifty IT index, that is also closed with a gain of about 0.2% after Cognizant's revenue growth forecast was maintained for the full year. If you look at some of the other sectoral indices, Nifty Metal has closed with a cut of about 0.7%, given that the sell-off we saw in JSW Steel as well. Other than that, we can see Nifty Auto Index closing with a cut of about 0.1% after the mixed auto sales figures that came in from the month of April. If you look at the broader end of the markets, the mid-cap and small-cap indices both have exhibited a negative trend in the markets. Mid-cap seeing a larger cut of about 0.4% each. Now, let's take a cue of what the top gainers and losers stack up on the charts at this point of time. First up, on the way up of the Nifty 50 gainers, that is your Adani Ports, seeing a gain of about 4% or so after their good set of numbers that came in from their March quarter, where we saw that the profit has risen about 50% year on year. Other than that, Bajaj Finance rebounding from Wednesday's trade, seeing a gain of about 2.6%. IndusInd Bank also recovering from its Wednesday's trade, seeing a gain of about 1.7%. Other than that, SBI reacting well ahead of its Q4 numbers, which is due tomorrow, where Money Control estimates a double-digit fall in the profit owing to its weakness in the treasury income. So SBI gaining up to 1.4% at this point of time. Reliance Industries, definitely the top news maker of this week, are gaining about 9% this week, and today in today's trading session also gaining about 1.2% for Reliance Industries. Other than that, we can see Maruti Suzuki also dominating the Nifty 50 charts with its good set of April sales data. On the other hand, if you look on the contrary picture, on the way down of the Nifty 50 index, that is your JSW Steel seeing a cut of about 5.5% after the Supreme Court rejected its bid to acquire Bhushan Power. So yes, that's a setback that came in for JSW Steel as a stock. Other than that, we can see some of the two-wheeler makers also seeing a slide. Bajaj Auto, the likes of Bajaj Auto, Eicher Motors, Hero MotoCorp, all of them seeing a cut of about 2% each. Other than that, some of the other losers are on this pack. That includes the likes of HDFC Life and Nestle, which is seeing a cut of about 2% each. But to decode more about the markets and stocks in particular, joining me is Milan Vaishnav, founder and technical analyst of ChartWizard. Milan, good afternoon. So good to have you. Past three sessions, we are seeing quite a choppy trade, and today also we did start off on a good note, but again Nifty has slipped below that 24,350 mark. We are in a tight range at this point of time. What is the next that we are watching out on the levels front for the Nifty as well as Bank Nifty?
Yes, hi Lovisha. Good afternoon to you and all the viewers. See, when we talk about markets, we have a couple of things to talk about. We have expected truce between US and China on tariff front, but we have also some, at the back of our mind, we have some tensions regarding the ongoing, issues between India and Pakistan. But I would prefer to choose this, or rather choose to answer this question on a more on a technical note, is that markets, by markets, I mean Nifty first crossed above the 200 DMA on 21st of April, and since then it's been consolidating above this important level. So 24,050 is where the 200 DMA lies, and so long as Nifty is above that point, we may continue to see the market consolidating, or rather taking a breather after almost 12% of rebound from the lows that it witnessed on the 7th of April. So this is one scenario, and secondly, since now we have ended the week, I would also take a look at the weekly charts, and we have 23,900 as the 50-week moving average. So by and large, even if 200 DMA is violated, but so long as if we are above 23,900, I expect the markets to continue to consolidate and build upon its rebound that it has, achieved over the past weeks. However, in the same breath, any violation of 23,900 would be a reason to little bit of a worry, as because if 23,900 is violated, then we can see some corrective retracement in the market.
Okay, all right, corrective retracement. Milan, what about the Bank Nifty? Because, for the week, Bank Nifty has posted good set of returns. We have SBI and Kotak Mahindra Bank, which is reporting results tomorrow itself. So how do both of these lenders look on the charts too?
Nifty Bank, it has continued to relatively outperform the Nifty on week-on-week basis, and I expect this relative outperformance to continue. Now, having said that, we have top two people, that is SDFC and ICICI, continue to consolidate post their breakout, and I expect these two stocks to do well. But on the banking front, rather than talking banking stocks in the same breath, I think this is the time that we differentiate between the private banks and the public sector banks, because PSU Bank Index is showing improvement in its relative momentum. And if nothing untoward happens on the quarterly numbers front, I expect PSU banks to relatively outperform the private banking space going on from here. But again, this comes with a caveat that there should not be anything untoward on the numbers front.
Okay, all right. We have the top newsmaker, that is your Reliance Industries, which closed in the green every single day of the week. How does Reliance Industries, the big boy of the Lal Street, look like on the charts? Because 9% this week, and today also it is one of the top Nifty gainers. Milan, now for you, what are the levels that you're eyeing out for RIL?
Reliance, I expect the stock to take a breather. It has crossed above its 200 DMA, placed at 1340, to be precise. So if the stock consolidates, shows the minor corrective retracement, then I would use those dips for buying Reliance. It has confirmed the multi-month, it has confirmed the reversal of the multi-month downtrend, and so long as it's above 1340 levels, it gets qualified for buying with every dip.
Okay, all right. Another stock which was one of the which dominated the headlines this week, that was your IndusInd Bank, after MD and CEO Suman Katpalia had tendered his resignation this week itself. But however, the stock has defied all of the negativity and it is up about 3.4%. Milan, now what about IndusInd Bank? Any key support levels that we need to watch out for going ahead into the trade?
820. So long as IndusInd Bank is above 820, it's going to stay stable. Any violation of 820 can, push the stock again into some corrective mode. But so far, so good. On the upside, we have strong resistance at 900, and 821 is the support for IndusInd Bank. If that is violated, then we can expect some retracement in that stock as well.
Okay, all right, 800 levels that we need to watch out for. Another stock in focus and one of the top Nifty losers also, that was JSW Steel, after the Supreme Court rejected its bid to acquire Bhushan Power. The stock did experience a slide of about 5 to 6% in today's trade, and it did fall up to 7% in intraday trades as well. Milan, what about JSW Steel and definitely other steel makers? Does this mean that other steel makers are going to benefit out of this, or how do you see the chart stack up?
Whether the other steel manufacturers will benefit out of this or not, it's more of the fundamental aspect of the entire issue. But talking about JSW Steel in particular, it has held on to its 100 and 200 DMA as support. It has not yet violated despite the intraday violation. But I would zoom out a bit and take a look at the high point that was formed near 1050, 1056 on the 3rd of October last year. So since then, this point has been visited multiple times, and JSW Steel has created a multi-point resistance around this level, and decline from there makes it has largely stayed in a sideways broad trading range, but has failed to break above that. So I would not be viewing today's price action as important, but would rather keep an eye on the 950 level, which is a multi-month support level for the stock. Any violation of 950 can invite some trouble. Otherwise, I expect JSW Steel to continue to stay in a range of 940 on the lower side, 1050 on the higher side, exactly in the manner that it has been trading over the past 8 to 9 months.
Okay, all right. 1050, that is what you're eyeing out for as a resistance zone. But one stock that did defy the weak set of Q4 numbers that it posted yesterday, that was your Eternal, which is formerly called as Zomato. The stock did close with a gain of about more than 0.5% or so. Milan, do you stand bullish on the counter? It has discounted the weak set of numbers that it did post for its March quarter.
I would rather stay neutral on the stock because, in fact, it has, survived a possibility of a major breakdown when it multiple times it tested the levels of 200, 202, which is the important support level, and from there it rebounded. However, it still has some multiple overhead resistances. So I would not be bullish on the stock so long as it's trading below 250. I would favorably look at Zomato or Eternal only after it moves above 250. Until then, I would maintain a neutral stance on the stock.
Okay, all right. 250 levels that you're watching out for Eternal. All right, let's take one other stock in focus. That is your Realtel, because that posted good set of Q4 numbers. The revenue and net profit hit multi-quarter high levels in the March quarter. And today also the stock responded quite positively. 12% gains in intraday session and did settle with about 6.7% gains or so. What do you expect? 350 levels or something that we can eye out for the near future, Milan? Is it possible?
350 levels, yes, you can expect, because that's not that difficult. And even if we test that levels, all the moves that we are seeing right now are the counter trend moves, because the stock continues to remain under a declining channel. But between March and April of this year, it has shown some initial signs of a potential base being put in place. So I would believe that so long as 300 levels stays defended, there are high chances that Realtel may not only test 350, but eventually over the coming months may even move past that level. I'm from a medium term perspective, I'm eyeing 400 on the stock. That will not happen overnight. That will not happen over the coming few weeks. But if anyone is holding the stock in their portfolio for at least a year or year and a half, perspective, they can expect initial target of 350, and above that 400 also cannot be ruled out.
All right, 400 levels that cannot be ruled out. Let's talk a little bit about IT stocks, because that also helped the market limit its downside in today's trading session. And for the week itself, Nifty IT index was up about 1% or so. Milan, where do you stand on IT stocks? And of course, any picks from the space that you want to outline?
Speaking of IT, I would first pick up Nifty IT index and take a look at it. And I see that the most recent phase of decline has come with a bullish divergence on the RSI against the price. And such divergences, whether they're bullish or bearish, and if they happen on the lead indicators, they are generally very potent sign and very early sign of a potential trend reversal taking place in that particular sector or a stock. And it has exactly happened with the entire IT space. I feel that IT space has put a base for themselves in place. I expect the overall large cap frontline IT stocks to do well. And among them, ICS, Infosys, and SL Tech would be my picks. I expect these stocks to relatively outperform the broader market going ahead from here.
Okay. Milan, Nifty FMCG was one of the top sectoral underperformers for this entire week. Anything that you're cautious about from the FMCG space, and how do you see probably the next 2 weeks to pan out for the FMCG or the consumer basket itself?
I'm not cautious as such on FMCG. This is a typically defensive space. They start doing well once we have a risk-off environment penetrating into the markets. There is no such risk off environment that we are seeing right now. So I expect that typical defensive space like that of FMCG to stay a bit subdued. If the Nifty slips below 23,900, if we see a little bit of caution weighing in on the markets, that would be the time when I have this FMCG stocks will start showing resilience. But till then, I don't expect any major trend to develop, neither on the upside nor on the downside.
Okay. Milan, now what about Nifty Realty Index? While we discussed about Nifty FMCG as being the top sectoral underperformer this week, Nifty Realty was the top performer this week. Any picks from the space that you're eyeing out, and what is your stance on the overall sector?
Again, realty would be something that I would be bullish on. Again, or almost for 3 months, 2.5 months, the index declined while showing bullish divergences against the lead indicators. This trend reversal got confirmed just 10 to 12 days ago. And right now, I see realty index continuing to improve its relative performance over the coming days against the broader markets. If I get little stock specific on that, then Godrej Properties, Macrotech Developers, and Prestige Estates have been our picks since last almost a month or so, and they continue to remain that way.
Okay, all right. Let's just one last question before we let you go, Milan. Any top picks that you're eyeing out from the overall breadth of the markets? Anything that you're watching out keenly for?
I would be a little defensive here because markets are bit in a breather taking mode, I will call it, and therefore I would rather suggest a couple, one or two delivery trades rather than pure trading picks. I would suggest buying Paytm on declines. You can buy it at current levels or with any dip. Expect 950 to 975 on the stock going ahead from here. Godrej Properties continues to be our top pick, and then comes the Cipla from the defensive space.
Okay, all right. With that, we have to let you go, Milan, but thank you so much for your time and joining us.
My pleasure. Thank you very much.
All right. All right, so with that, we have come to an end of this edition of Closing Bell. We'll be back with markets on Monday. Until then, do have a good weekend, and thank you for watching.